what happened to the Bitcoin price? Oh my gosh, this could be even bigger than we think. Bitcoin was inching up and we thought, oh, that's so interesting. Wow, it's behaving very interesting. Okay, could Bitcoin be not only a risk-on asset, but a risk-off asset? This could be a hedge against counterparty risk. Lo and behold, the regional bank crisis this year can tell you our conviction has never been higher.
We're about to take a wild ride on the cryptocurrency roller coaster with more twists than a summer blockbuster. And who's our guide through this thrilling adventure? None other than the queen of innovation herself, Cathie Wood. Cathie Wood's got us questioning the very fabric of the cryptocosmos. Is Bitcoin not just a risk-on asset, but a risk-off asset too? Could it be the ultimate hedge against counterparty risk? Focus as we unravel the mysteries of the crypto market. And while you're at it, smash that like button, hit subscribe, and stay tuned for more crypto thrills as we continue our heart-pounding discussion with the genius herself, Cathie Wood.
Last year, 2023, clearly the markets started to understand that the Fed was just about done raising interest rates. Now, the Fed kept saying higher for longer, and some Fed members were saying, we've got to raise interest rates higher. Certainly Larry Summers, who's not a member of the Fed but seems to influence them, was saying that. But the markets started to see through that. And I do believe that 21 and 22, which were terrible years for long-duration assets, our kind of strategy, long-term bonds, the worst bear market, really in history since the 1700s, we've paid our dues. And now I do believe that what we were projecting or forecasting and have been for quite some time is that inflation, when history is told, inflation was transitory and a function of a supply shock and supply chain bottlenecks, and that it flipped pretty quickly from inflation down to 2%, past 2%, and into negative territory. That's what we think is going to happen this year. So I think the Fed will take note. I'm just looking at the number here. About 15 million of the Bitcoin supply out of 19.5 million outstanding is in the hands of strong holders. And we know that the total supply ever is going only to 21 million. So to pry it out of the hands of these long-term holders, now that institutions are going to be given, we believe, the green light by the SEC we hope and believe the next week, the price that they're going to demand now that this asset is so scarce and the push in from institutions, it won't happen all at once right away. You know, there are lots of boxes to check and so forth. But I think the long-term holders understand there's a big buyer on the way here. If you compare this to gold, gold supply has increased on average roughly 1% per year. Bitcoin's supply growth is going to drop below that, we believe, this year.
Cathie Wood is taking us on an even deeper dive into the tumultuous waters of 2023. As the markets started grasping the Fed's changing tactics, we witnessed a turning point. Larry Summers' influence loomed large, advocating for higher interest rates, but the market saw through the noise. The stormy seas for long-duration assets, including our trusty long-term bonds, gradually subsided. It seems we paid our dues during the worst bear market since the 1700s. But fear not, the tide is turning in our favor. Cathie's crystal ball reveals a forecast of shifting from inflation down to 2%, possibly even dipping into negative territory this year. Picture this: about 15 million bitcoins are held firmly by strong holders, while institutions eagerly eye the crypto space. Scarcity has become the buzzword, and the demand for this digital gold is on the rise. Bitcoin's supply growth is poised to drop below gold's, making it a sought-after commodity.
And then the other thing that we believe will, with history as our guide, become obvious is that we've been in a rolling recession for roughly 2 years now. Number of housing measures are down 40%. New and existing home sales are as low today as they were at roughly the depths of the 08-09 crisis. We've seen auto sales not get back to the normal 17.5, 18 million unit range. We're in that 15.5, 16. So that's recession-like. Commercial real estate is in a world of hurt. And I think what's going to happen now, companies are losing pricing power. They're going to have to cut prices. They see that when they don't cut prices, their units fall apart. And I'll show you some slides on that in a minute. And so they're going to get religion. And in order to salvage margins, what will they do? They will start cutting back on employment. And the unemployment rate will continue to go up. It's still at very low levels, but it has turned the corner. I'm not thrilled about that. I just think the Fed overdid it. I don't think this was necessary, but we do think it's going to happen. The recession will not be as serious as 08 or 9, nothing like it at all, partly because we've been through a rolling recession, and this will be the tail end of it. And so that, too, will move the Fed. And so we think interest rates are going to surprise on the low side of expectations as inflation and real growth surprise on the low side of expectations in an election year. So that's pretty interesting. You can see for the first time in history, our debt, our total public debt, this is federal debt, has crossed over. It did so. It was threatening to do so in the last 5 to 10 years. It did so decisively during COVID. Now, one thing about this is these are two different kinds of measures. Debt outstanding is a what they call a stock. It's an absolute number, level of debt. GDP is more of a flow. It is a measure of the goods and services produced in any year. And if we're dealing with a quarter, it's annualized. So again, any year. So different kinds of statistics. I think the debate is serious, but I don't think it is as serious as many think it is if we are right. That innovation solves problems, and we're going to go into a period, thanks to unbelievable amounts of innovation. You just heard about Bitcoin. We believe that real GDP growth is going to be turbocharged. So the 3% that we've seen on average over the last 100 years in real GDP growth, we think is going to be much higher going forward as these innovations hit critical mass, and all of them are moving into prime time. So, and then you can see on this next page what I mean. So this is public debt outstanding, so that purple line on the previous chart, divided by GDP. Innovation solves problems. Bitcoin is a risk-on asset, but it is a risk-off asset as well. And if there are going to be bankruptcy problems out there, then having a vehicle with no counterparty risk in a portfolio will become more and more important over time.
Get ready to take some serious notes, money talkers, as we join Cathie Wood in an economic masterclass. The symphony of insights she provides is nothing short of a financial masterpiece. Cathie unveils a reality we've been living through for the past 2 years, a rolling recession. Housing measures down, auto sales in a slump, and commercial real estate feeling the heat. Companies losing pricing power face a stark choice: cut prices or face falling units. Brace yourselves, the unemployment rate is on the rise, signaling the tail end of this economic roller coaster. While not as severe as the 08 or 09 recession, Cathie believes the Fed might have overplayed its hand. Interest rates are set to surprise on the low side, adding a twist to the economic narrative in this crucial election year. But amidst the challenges, Cathie's optimism shines through. She sees innovation as the superhero that will turbocharge real GDP growth. In her eyes, the public debt debate is serious, but innovation might just be the superhero we need. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.